So as I mentioned in my presentation, there are some ways to design taxes that are less, design a tax system that is less harmful to growth. And the key features to keep in mind there, whether you're looking at corporate taxes, personal income taxes, or other taxes, is to pay attention to the rate and the base to make sure that you are not creating distortions and that the design is neutral. So for something like the corporate tax, you want to have a system that has a low marginal rate and a base that's designed to allow for all business costs of inputs. You don't want to be inflating business profits, taxable profits, by not allowing businesses to deduct all of their costs, and that includes capital costs and things like I was talking about, and that should allow for either depreciation that reflects net present value of investment, or an immediate first-year write-off that is generous enough to account for the majority of fixed investment that growing businesses are using. On personal income taxes, it's similar, except you want to make sure that the personal income tax the rates are not so progressive so that individuals, as they're going up through the higher brackets, do not choose to either make different decisions about whether they would work, or if it's a married couple, a decision about whether both individuals would go to work and be hit with that next euro at a higher tax rate, and avoid distortions or complexities in the system with filing and compliance and things like that. As I mentioned, on consumption taxes, a VAT can be one of the most efficient taxes because it is neutral relative to savings, and it's directed on something that is not going to be something that folks will necessarily avoid, unless you're in a situation where you're in on a borderline, like say you live in Hungary with a high VAT that Hungarians face, and you choose to go across the border to a neighboring country and buy your goods at a lower VAT rate. Unless you're in a border situation, a VAT can allow for appropriate allocation of the tax base to the immobile factor, which is the consumption, that you're going to be, that the tax flows through in a way that's passed on at the value added from business to business and then business to consumer in an efficient manner. Property taxes, the tax base should be the value of the land rather than the buildings, because you don't want to be taxing improvements to the land relative to the land itself. A lot of countries allow businesses to deduct the cost of their, deduct the value of their buildings from, as part of their property tax, or deduct their property taxes from their corporate tax bill to be able to minimize the distortion of the property tax for businesses. There are multiple ways of getting at improvements to a tax system that allow it to be a little bit more efficient or competitive. And you have to think about whether individuals are choosing to work here or choosing to move and work somewhere else, or whether businesses are choosing to build and grow here or build and grow somewhere else, how taxes might play into those decisions. And the efficiency of the tax system and the competitiveness of a tax system are incredibly important for those decisions.